Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Pending home sales jumped 7.5% in October. Mortgage rates rise for the third consecutive week. More home buyers can now qualify for more expensive loans. Analysts explain the impact of today's strong housing market. Unemployment benefit claims lowest since 1969. More multifamily investors consider student housing. Suburban home rush still strong. And finally, what's ahead in the housing market in 2022? I'm Whitney Sewell, Blackbridge Capital. I hope you have had a great week. Here's some highlights I want to share with you. Don't forget to like and subscribe. Please leave a comment. We would love to hear from you. We would love to hear about things that you want to know more about or that help you make better investing decisions. Here we go. Home demand remains high. According to the National Association of Realtors, pending home sales increased 7.5% in October, rebounding after a decline in the previous month. 3 Florida metros topped the list of the most improved housing markets over the past year. Orlando, Florida saw the largest increase in ranking among larger metros for the third year in a row. This was followed by Jacksonville, Tampa, Dallas, and Nashville. According to NAR chief economist Lawrence Yun, more buyers have signed contracts to purchase homes much sooner due to fast increasing rents and expectations of mortgage rate hikes. The huge gains recorded in the year so far assure the economy of the most impressive existing home sale values in 15 years, which has already reached more than 6 million home purchases. Nevertheless, Yun expects home prices to taper a bit over the next few months. Now, some economists suggest that the fear of higher mortgage rates by spring is what's pushing more buyers into the market now, as indicated by the rise in pending home sale figures. Mortgage rates rose for the third week in a row to 3.31%, reducing the refinance incentive for many borrowers. The average purchase loan amount rose to $414,700, the highest since February of 2021. This reflects purchase activity on the higher end of the market, dominated by newer and more expensive homes for sale, as announced by the Mortgage Bankers Association. However, the mortgage rate spike isn't going to be sustained, according to some analysts. This week, news of the OMICRON COVID variant and the Fed's forecast on inflation drove the average rate on the 30-year fixed to dip 15 basis points. And speaking of sky-high home prices, Fannie Mae and Freddie Mac have now raised the maximum borrowing limit for government-backed loans to a record level at nearly $1 million for high-cost areas. As a result, the baseline conforming loan limit for 2022 will be $647,200, up nearly $100,000 from last year's limit. Higher cost areas will have a new loan limit of $970,000 or 150% of the baseline loan limit. The conforming loan limit is the dollar cap on the size of the mortgage that Freddie Mac and Fannie Mae are now willing to buy or guarantee. By raising conforming loan limits, it is expected that more home buyers can avail to jumbo mortgages that used to be difficult to qualify for through private lenders. Their boosted buying power means they can receive higher financing for loans through Fannie Mae and Freddie Mac, which come with lower interest rates. Home prices spiked 18.5% year over year, according to the report by the Federal Housing Finance Agency House Price Index released last week. And with the record low mortgage rate and more robust economic fundamentals this year, market analysts recommend that home buyers and homeowners must swiftly act now. Experts predict mortgage rates to rise in December and throughout 2022, which could make a huge difference in the affordability in the coming months. MPHASIS Digital Risk suggests potential home buyers have their lender's underwriter issue a conditional loan approval to compete with cash buyers in the market. The proposed interest rate hike by the central bank is unlikely to slow down the housing market and suggests that renters think about investing in homes due to rising rental rates. The continued high demand and the possibility of mortgage rate hikes should also alert buyers and sellers to be more active this winter than they traditionally are. Realtor.com also forecasts that 2022 will have a very competitive real estate market as home sales growth will be stronger and more sustainable. It is likely to linger for the next 3 years due to millennials finishing their first home buying years, boomers starting to downsize, and a fraction of Gen Z reaching their home buying age. Weekly jobless claims dropped to 199,000 last week, hitting the lowest level since 1969. The trend has been observed in recent weeks as a result of fewer layoffs and higher wages to attract new hires that impacted the drop in unemployment rate to 4.6%, down from 4.8% the previous month. In October, more than 531,000 jobs were added, according to the Bureau of Labor Statistics. While still way below pre-pandemic levels, this growth is forecasted to be sustained in the coming months, according to Bankrate. The drop in weekly jobless claims is a welcome surprise as it beat economists' expectations of 260,000 filings. In other news, the first 3 quarters of 2021 saw $4.85 billion in multifamily investment, which is on its way to surpassing 2020's $6.25 billion record, according to JLL Capital Markets Group. Buyer activity is concentrated among conventional multi-housing investors with some experienced commercial real estate investors. Student housing, which suffered tremendously during the pandemic when many universities and colleges shifted to remote learning, is now making a comeback as more students return. Now that things are changing, the multifamily investment outlook is much improved and is expected to be sustained in the coming year. Investors are heavily focused on Tier 1 universities, although aggressive pricing has been observed among Tier 2 and Tier 3 markets. Robust enrollment numbers correlate to higher rental rates for student housing properties, which leads to strong property performance and rental growth, according to JLL. And are you looking for a house in the suburbs? Well, the chances of buying one may be slimmer than you think. According to Realtor.com, suburban real estate market activity remains stronger than ever, even as larger metros are making a comeback. But competition is heating up. The number of home buyers shopping nationwide for suburban homes has jumped 42.1% since the pandemic began. It's unbelievable. This is attributed to long-term remote work options and rising rents in downtown areas, resulting in a faster housing purchase pace and more intense competition. And finally, Realtor.com's annual housing market forecast has been released and projects home sales growth to reach 6.6% in 2022, which is a 16-year high for nationwide sales. The real estate firm is banking on 45 million millennials to make their first purchase in the coming year, as a more stable economy and lower unemployment rates will boost their buying power despite increasing home sale prices and mortgage rates. Aside from heightened millennial buyer activity, some of the other trends mentioned in the report include 1 in 5 home buyers looking to sell and move no longer need to live near office, as such homes in the suburbs will be highly favored. Affordability will remain a challenge, with home prices rising by 2.9% and rents outpacing home costs at 7.1%. Hispanics will make up a large market share, comprising more than 1 out of 10 recent home buyers. And that's it for this week's highlights. I hope that it's been educational. I hope it's helpful to you as an investor. If there are other things that help you make better investing decisions, we would love to know about it and do that research for you. We'll have it right here for you every week. So please let us know. We would love your feedback. Please subscribe. Please share it. And we look forward to working with you at LifeBridge Capital. Have a blessed day.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.